This week, CoreLogic published a series of data looking at the real estate market of New Zealand. And the suggestion was that although your house and houses in New Zealand would appear to have uniformly stripped you of some of your asset base, it might not be as bad as we thought. There are, though, some parts of this country that would appear to have escaped the carnage of depressing and declining property falls, high interest rates, and the banks winding up mortgage rates and lending ratios as well. There are some people whose houses, if they were to sell them tomorrow, and there's the question, could they? But if they were, the market would suggest that you haven't actually lost anything at all. I think Queenstown's one of those. And we're relatively close to Queenstown, so we're sort of affected. If you live in Wellington, God, and you're trying to move out to a nice, sunny provincial area, it's all a bit depressing. But is this the end of it? Is there light at the end of the tunnel? Is there a dawn at the end of the darkness? Joining us to talk about that is Tommy's Real Estate Sales Director, Tim Clark. Tim, welcome to the show. Nice to have you aboard this morning.
Oh, good morning, Michael. Thanks for having me. It's a pleasure.
Now, your job is to be resolutely optimistic anyhow, because after all, you are a real estate sales director, and the last thing you want to say is there's a bear market, don't go out there. But
that is a good point.
Yeah, well, I mean, a bit like me being, I don't know, a manic depressive saying there's no such thing as, highs and lows of the world. But But I am interested in the CoreLogic column this week, and by their release. They've looked at all the real estate data around New Zealand, and they say that we're at the bottom or very near the bottom, and that things should get better. What's the cause for that optimism, do you think, from your point of view?
Yeah, so that was interesting data. I guess the first thing I would say is one of the things about data is it is reflective. So at Tommy's, we've probably noticed this for sort of perhaps 3-4 weeks prior to this. But I think where things have got to, I would suggest, I'd agree, I think we are at the bottom or very near the bottom. Remembering, of course, Wellington's been hit the hardest across the country with, sort of 18 to 20%.
Yeah, that's huge.
Which is huge, and that's year on year.
Yeah.
Look, to be fair, I think prices needed to be corrected. They couldn't continue the way that they were going, and so I think where we're at now is we've probably found the new norm, if you like. Now, things have become a little more stable over the last few weeks, and what I mean by that is that people are starting to talk about interest rates have probably reached their peaks. The OCR has probably reached its peak, and inflation is stabilised and hopefully starting to move down. So what we're seeing is people are starting to come back out and get on with life, and do the house hunting that they need to. And so there's more activity in the market, and I think people are just feeling generally a little bit more comfortable with a slightly more stable environment than what we've seen.
I was thinking also, though, I was looking at something else, not usually, well, I suppose it is connected, immigration numbers, and net immigration numbers have been released, I think, the week beforehand, which shows that we've had a record number of net migrants to this country, back to the sort of the good or bad old days, depending on what you like. Do you think that's had an impact as well?
Yeah, I do. And that's a good point that you raised. That's absolutely connected to the real estate industry in a couple of ways. The first thing is that a lot of those people, the net migrants, will come in and a couple of things will happen is that they'll be looking for work on the most part. So that gives, and hopefully some jobs, particularly those fruit growers, would be fantastic. But there's more stability, there's more people employed. Equally, those people need to go and live somewhere. A lot of them will probably rent. So whilst we have a rental department at Tommy's, I'm a rental agent, but we're seeing pressure there. And then that also leads to, and then of course a whole lot of them want to buy a house as well. So with the declining stock levels, because this is another major factor in what we're seeing, it's fairly usual for this time of the year to be fair. However, CoreLogic did point out, and I would agree with them, that stock levels are actually lower than we would like to see right now. So all of those things are sort of starting to put a little bit of pressure back on price. So when I say that I don't think prices are going to start skyrocketing again, I think what we'll see in Wellington is a bit of a flat line. So that's why I sort of feel fairly comfortable to say that I think we're at the bottom or very, very near it.
Tim, you're resident in Wellington?
Yes, I am indeed. Yep, Kandala.
Okay. Oh, well, yes, I lived there. I lived up in Amapur Drive.
There you go. I've sold houses there.
Yeah, well, nice little brick and cedar place, as most of them are. But can I ask the question, and the obvious question, why is Wellington, the drop in house price in Wellington for not just the last year, but probably over the last 2 or 3, been so dramatic compared to the rest of the country?
Well, in my view, it's a pretty simple answer. We probably had the biggest increase over a short period of time. And look, prices in Wellington were skyrocketing. Even as real estate agents ourselves in the market every single day of our lives, we were surprised at what we were seeing. So I think if you look back, you would probably note that prior to the last 18 months, Wellington probably had the biggest, if not one of the biggest, increases in prices, and that had actually come off the back of a real long flat line in terms of stability of price, and it just skyrocketed. It exceeded everybody's. Essentially, it took everyone by surprise, and that's why I say that we have had a price correction. Look, the other thing I'd say to people sitting at home at the moment thinking, oh my gosh, what is my property worth? I have an interesting take on it. Your property's not really, the value of it doesn't really matter unless you're transacting it. And what I mean by that, if you're sitting at home right now going, oh my gosh, prices have dropped 20%, but you're not expecting to move in the next 2 or 3 years, it doesn't matter. So the price correction needed to happen, but I think it came off the back of a very quick, steep rise in prices. Yeah,
I mean, it's a fair point you make, that if you can afford to still service your mortgage, the value of your property, if you're not going to move, isn't quite as bad as you think, because as a general rule, the trend will be upwards, and if it goes down, then it will eventually come up. But, and here's the but, part of that is the servicing your mortgage. I grew up in a generation in which if you had a mortgage or anything near $200,000, that was just regarded as oh my God stuff. Now mortgages routinely $400,000, $500,000, $600,000, maybe more even. Yeah. Servicing that, man, how do people do it?
Well, that's a really good question and something we look at really closely. And of course, we talk to people in the market all day, every day. So it's something we're really conscious of. We're not seeing. So first thing I'd say is we're not seeing a lot of people. We're seeing very few people really struggle at the moment. It is happening, and it's a tough time. There's a couple of things going on. Even though the rates have jumped from sort of in the 2s to 6s now, it's the pace at which it's happened, and that again has taken people by surprise. So even though any time you go and get a mortgage, no matter what climate the market is in, the bank will do what's called a stress test. So today what they're doing is they're stress testing every single person at 8.75%. As a general rule across most of the banks, there or thereabouts. Yeah. Now, of course, interest rates are in the 6s. So if the bank comes back and says, Michael, you can have a mortgage, your mortgage repayments are going to cost you such and such, that's at 6%, but they've actually stress tested your financial position at 8.75. So there's a little bit of protection there for people. The other thing to note is I think we will see more people struggle a little bit more soon, because there is still a number of people on fixed rates that are relatively low compared to the rate they'll have to move to now. So there's a little bit more pain to come for some people. But equally, again, if you've had a mortgage for 5 years or more, you're probably not affected by this, unless, of course, you have to change your rate. But even so, if you've had a mortgage for 5 years, you may have been in and around the 5s or 6s anyway.
Which leads me to the next question, and that is, are there parts of this country, I mean, can you look at of course you can. You will be able to instinctively, I would think, as well as empirically, look at parts of New Zealand and say, these places are almost immune, and they will continue to be so, from these sorts of upward or downward depressions?
That's a good question. I think there's probably pockets around the place, and certainly CoreLogic have mentioned a few of those. I heard you mentioning Queenstown in the intro. That's always an interesting one, but that would go further into sort of places like Arrowtown now and Wanaka. But the major centres, will react to the market. And as a general rule, we sort of tend to follow Auckland, although in saying that Wellington has sort of done its own thing over the last 2 or 3 years. So if you're in a major centre, market forces will dictate what's happening in the real estate market. But yeah, there's absolutely going to be places around the place that really they are sort of insulated from it, for sure.
Well, and the other thing that I thought also was, I can remember there was a massive demography study done about turn of the century, and the conclusion of that was that New Zealanders follow the sun, and that particular concept was now driving the growth or the decline of provinces and regions around New Zealand. Now, obviously, it can't be the case where I live, because I live in the Queenstown Lakes, Central Otago area. But is that true in the North Island, do you think, and in everywhere else, which doesn't have sort of scenic majesty?
Yes, I think you're right, and I think that is still true. I think people, as they move through their lives and children grow up and come to the end of your career, people do certainly, and particularly Wellingtonians for sure, because we're not known for our weather, which may come as a surprise to people. But people certainly do look to move to warmer climates. From Wellington, it might be Nelson, the Wairarapa, the Hawke's Bay area. But of course, the Hawke's Bay area has been troubled with weather patterns, which is a horrible time for everyone involved. But and that's affected that market at this moment in time. But Hawke's Bay was certainly
booming,
fairly stable, and because of those migrations that you talk about, I think we still see that today for sure.
And does that mean that it's less attractive? Whereas, for example, ironically, on the west coast, where you've got sort of the Wanganuis, the New Plymouths, the Palmerston Norths, the Levins, the Wellingtons, the people moving from the west to the east.
Look, I think I'd agree with the original point, which is people will chase the sun. But coming north of Wellington on the west coast, that's really interesting. Transmission Gully,
yeah, that's true.
It's certainly helped, and we've actually just getting involved with a really amazing development just in Whitby there. It's called Silverbrook. Now, you jump on Transmission Gully, you're 12 minutes with no traffic to Whitby now, and then there's this brand new development where you're buying wonderful homes for sort of mid-800s, and planted, and there's lots of grounds and playgrounds for kids, and it's so quick back in. So we're actually seeing quite a migration up that way, particularly the Kapiti Coast area. And
there is better weather there. I mean, that's just true.
Yeah, there is, for sure. Yeah, absolutely. It's amazing, and even if you go to the Wairarapa, it's 60 minutes north or sort of east from Wellington, the weather is markedly different.
And I was just going to ask about Transmission Gully, because I remember a former mayor of Wellington, I think it was Fran Prendergast, and she was always opposed to Transmission Gully. And when was it not Kerry Prendergast? That's right, not Fran. Kerry Prendergast. And she always opposed to Transmission Gully because she said it would be the death of Wellington. I think she was being dramatic, but she was making the point that once that highway got you out of Wellington City, you could go and commute and live in the Waikanais, and just further north. In other words, out of the city of which she was responsible. Has that occurred, do you think? Is that part of the reason why house prices might have dropped in Wellington?
That's a really interesting question. I'd almost feel, and this is anecdotal, but I would think that possibly at that time she may have been right. But we are seeing net migration into the country. In Wellington, prior to COVID, the population growth was quite marked. It was on the increase, and I think we'll see that again. Wellington is becoming more attractive. So as more people move to the city, that again puts pressure on stock. We don't have a lot of property in Wellington. Geographically, it's difficult to keep building houses unless you push. So I think maybe when she said that, she may have been right, but now I would think there's enough people around that Wellington's going to still remain vibrant because we're a little city, really.
Okay, and finally, do you see, and you said in your introduction that you thought that the OCR had peaked. You don't see any movement upwards again from the Reserve Bank governor? You think that, if that's the case, their mortgage rates have peaked, have they?
I thought he was very brave I appreciated it. I thought he was very brave. And it's like that crystal ball thing. I wouldn't be surprised if there was a minor tweak to where he's at now, but he's sort of indicated that he won't, but he may be forced to do that. Let's see. In terms of actual bank interest rates, of course, they build in, the rates today are built into the OCR at a certain level, which is generally higher than where we see it. But interest rates are still creeping up on the ones in the 2-year rates at the moment, and then they sort of started dropping 5 years. So I think we'll still see things moving around. We always recommend people work with a really good mortgage broker that's been recommended to you or you've worked before, because the interest rates chop and change around. Have they peaked? I'd say they're going to be really close to it, I would think, but equally, I think we might see them at this level for some time to come.
Right, so you're saying the persistence of it all. And finally, real estate industry, it's a fascinating industry. Ultimately, at the end of the day, it ebbs and flows with, it would appear, the amount of stock you've got on the housing market. Has there been a big drop-off of real estate agents in the last, year or so, as numbers have declined of houses for sale?
Yeah, look, there has across the country, but there's a couple of factors going on there. Real estate agent numbers have certainly dropped. It's not an easy industry. As much as people think it is, it's really not. It's a 24-hour a day. We're in the service industry. We talk a lot about it, Tommy's. We're actually in the people business more than the house business. We've got to look after people. We're a service industry, and that requires time and dedication and hard work to deliver a result. And I think when the market was going really, really well, you might remember the headlines that were splashed across everywhere going record numbers of new real estate agents into the industry. And that was happening for a couple of years. And I think that was something people are jumping in going, oh, this looks great, realising it's actually not that easy, and then a number of those people have dropped away. But there are certainly people out there hurting. Luckily at Tommy's, in our city office, we've got 45 agents and we haven't lost anyone, and I don't expect that we will. But there will be smaller businesses around the place where there's just not enough volume going on for people, and it's too hard to go and get listings. It's highly competitive, so they exit the industry.
Yeah, well, that's the point you've made, hasn't it? Right at the start of this interview, you said that stock levels were lower than usual. So, I mean...
Yeah.
But is the primary reason for that because someone like me who might think about selling their house, for example, goes, I'm not going to at the moment because I'm not confident about the market returning me a good price for my house?
Yes, that's very true. And again, there's a couple of things going on there. That's absolutely happening. But now that we're just starting to see, and I'm talking really recent, sort of 3 or 4 weeks, a little bit more stability, people are starting to come out of the woodwork. Our appraisal numbers at Tommy's are actually going up. So we're starting to talk to more people. Now, that journey might not be come and talk to me and appraise my house, right, I'm in. That could be a month, or it could be 3 or 4 months' time. Winter, our numbers tail away, so that's normal. But the stock levels are certainly being hurt by that. Because the other thing people go as well is, oh my gosh, the stock numbers are low, so what can I buy? What can I find something to buy if I do sell my house? Yeah. And that's where you need to work with a really good real estate agent that actually cares about you and wants to look after you, because they can help you at both ends. Piece to that is, I would say that if you are buying and selling in the same market, the price doesn't really matter. It's the change over, and you're either trading up or down. If it's sideways, that doesn't matter. But if you're trading up or down, it's the difference, not so much the price, if that makes sense.
No, understood. Yep. And a lot of people will be, as we're talking about getting old this morning, a lot of people will be. Tim, thanks very much for joining us. Much appreciated.
Really appreciate it.
You have a good weekend.
Thank you.
Okay, thank you. That's Tim Clark, Tommy's Real Estate Sales Director. I mean, I know he's got to be optimistic. It's his job. I made that point at the start of it. But it was interesting just getting the comment on CoreLogic's report this week, which suggests that I didn't know that. Now, I'm sure all the rest of you did, that there was a bank stress test. Did you know that, Josh? I suppose you don't have a mortgage, do you?
No, I never knew any clue at all.
I did not know that. So, and so they just look at you and go, okay, it's not the KFC that you're having, it's whether or not you can afford the 8.7% mortgage interest rate. And then putting you through that. Well, that's sort of reassuring in some ways.